Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my micro bearish scenario where we're looking for an impulsive structure to the downside in 5 waves and much lower prices to come, where wave 1 is finished, wave 2 is finished, hitting the 0.5, which is a common target for a wave 2, for then a nice 5-wave structure to the downside inside wave 3. Now usually a minimum target for wave 3 is the 1.618 trend-based fib extension taken from the high to the low of 1 to the high of wave 2, which is sitting at 25.3k. Now in this scenario, that then means that we are locally looking for another wave 1, 2 and then a bigger 3 to the downside, and this is where my local bearish folder comes in, which is this scenario over here. So in this scenario, we are then looking for a blue wave 1, blue wave 2, looking for a big wave down. For blue wave 2, the most common target is the 0.5 to the 0.786, sitting between 28.6k and 28.8k. Currently, you can see that price retraced to the 0.382, which is a less common target for a wave 2. These fibs are taken from the high to the low of wave 1, and the invalidation of this scenario is if price reaches the high over here of the green wave 2 at 29k. Now if we then zoom in to this blue wave 2 over here in more detail, then this is a scenario that I'm keeping an eye on, and I'm not the only one, because while I was working on this scenario, also Pistachio, known as Will88 in Discord, but Pistachio on YouTube, thought of also the WXY scenario, with inside wave X a potential ABC to the downside, which is also what I was thinking. So potential W over here, 3-wave structure, then an ABC to the downside for then a wave Y in this bearish scenario, and after wave Y, which then also ends wave 2, you're then looking for a bigger move towards the downside. Now in this scenario, if we take a quick look at this wave A to the downside, as it looks very impulsive, like a straight line, but if you zoom in on the 1 minute, then you can see it looks a bit 3-wavy. So that is where the wave A comes from. So wave A can be both a 5-wave structure or a 3-wave structure, depending on the scenario. In a zigzag 535, you're looking for a 5-wave A to the downside, but in a flat you're looking for a 3-wave A. So in this particular scenario, we're then looking for a 3-wave A over here, for then a 3-wave B structure hitting the most common target area for wave B, which is between the 1.236 and the 1.38, which also is the area of the order block, by the way, as you can see, which we have now hit, which is acting as resistance in confluence with this area. And then you want to see a wave C to the downside, where the double bottom that price created at 28k will be taken. Now after this wave X, you're then looking for a 3-wave structure to the upside for a wave Y. If we then zoom out once more and look at the micro bullish / then bearish scenario, in this scenario we have the same wave 1, but wave 2 is longer. So instead of ending at the 0.5, we are looking for a bigger wave 2 going towards the golden pocket or the 786, for then continuation to the downside in a bigger wave 3. If we then zoom into the structure over here and look at a count that would suit this particular scenario, we are looking also again for a WXY. Here we then have a W 3-wave structure in yellow, looking for then a green WXY, where W is then a zigzag or zigzag family pattern structure. Then you have a wave X, which most commonly is also a zigzag. And then in wave Y in green, we have a 3-wave A, 3-wave B, 5-wave C to the downside. So that means that this is then your low over here. And now you're looking for a wave Y to the upside. And because wave W appears to be a zigzag 3-wave structure, wave Y cannot be in a sideways double combo a zigzag structure, which leaves for wave Y a triangle or a flat structure, A, B, C, where then once again you're gonna take the double bottom at 28k, which is definitely an area or an area of interest, like a scenario that I am looking for, taking that double bottom. Now the common target area then for the yellow wave Y is between the 0.618 and the 1.236, which is between 28.8k and all the way up here 29.5k. Now, if we then over here look at the micro most bullish scenario, yes, I actually managed to quote unquote find one, because it is so incredibly difficult to look for anything bullish. we have to look for over here a wave 1 or a wave A. I mean, an A, B, C in the end will give you a move to the downside. So, I mean, it's not too bullish, I suppose, but at least over here it can then also be a wave 1 for then a WXY correction in a wave 2 or B. Looking then for either a wave 3 or a wave C. Of course, a C would be bearish and a wave 3 would be bullish, but that does mean that preferably these are your lows and you're not going to go down once more to take the double bottom over here and hit the golden pocket once more. Preferably, you want to see continuation, especially in the bullish scenario. Now, if we then look at the confluences, then you can see price continues to range. We hit the order block as mentioned, bounced on the value area low, moved to the point of control, now hitting the order block. If price moves below the point of control, then probabilities do increase for price to continue down and look for that double bottom at 28K, where potentially a swing failure pattern can be very interesting, which means you take the liquidity, you close above, and then you move back towards the upside. So that's at least something to look for, and we got to wait and see if we get it. If we look at the CVD divergences, then at the moment we have over here the bullish CVD divergences, where the target for the bullish CVD divergences is this high over here. And this over here is a bearish CVD divergence, which is like the 5th bearish CVD divergence or something with this high. Because if I go over here to the AJGR chart, where you can see the divergences, just look at the yellow line over here, right? Lower highs on price consistently, but consistently also higher highs on the CVD. And as it stands, you can see if we zoom in, that even the price over here still has bearish CVD, because the yellow horizontal line is above the pivot, the CVD pivot of the high that we made over here. So consistently bearish CVDs on yellow, while at the same time on blue, if we zoom out, that is where that bullish CVD comes from. Higher low in price, but lower low on blue. At the same time though, for blue, it is a second CVD, lower probability of it playing out. And the bearish CVD, well, this is like the 5th CVD, so also not too great. So considering CVD, it's basically we're like in the middle. It's like a neutral game, and preferably I like to wait to see which one plays out and then take it from there. If we then go to the probabilities, I do like to add something to the probabilities over here. Currently on the micro, a bearish scenario has higher probabilities of playing out. And the reason for this is mainly this structure to the upside. If we go to the 3-minute time frame and have a little look to the upside, then if this is the low and you look for new highs, then this has to be an impulsive structure to the upside, another 3-wave structure, right? But if we then look at this structure towards the upside, then potentially you could say we have some sort of an expanding diagonal and then a 1, 2, 3, 4 and a very big 5. But an expanding diagonal is very, very rare in Elliott waves and therefore never preferred, which increases the probabilities that this is a 3-wave structure instead of a 5-wave structure, which therefore lowers the probabilities of a more bullish scenario where you're going to reach these highs. Now what you can also see is that more locally I also have the highest probability scenario being bearish. It's Elliott wave probabilities, not personal preferences first of all, but also here you can see 5-minute move up from the local low. And what I mean is this move to the upside over here. So if we zoom in to this structure more locally, then the moment price started forming movement towards the upside, we had over here potentially a wave 1, then you're going to be looking for a wave 2, 3, 4 and then a wave 5. The problem here is that over here we have overlap between wave 1 and wave 4, which is not allowed in an impulsive structure, which increases probabilities. This is a 3-wave for then another 3-wave and another 3-wave. So potentially a double zigzag structure, which then also fits the scenario where we are looking for this to be a wave B, as a wave B has to be a 3-wave structure. So then you have a W, X and a Y, and then now you're going to be looking for a move down. So because of this structure over here, more locally, the probabilities are also higher for a move towards the upside, because over here a normal impulsive structure is not allowed because of overlap. A contracting diagonal doesn't work as well, and an expanding diagonal again is very, very rare. So it's all about probabilities. There's no certainties in trading, of course. We have to wait and see what price is going to give us. If we do get to the downside, it will be very, very, very interesting to see what is happening here. And overall in this range, we've been in this range now for quite a long time after this news push over here and the drop immediately. I just want to say caution and trade safe. Of course, that is always the case, but this range over here can be very, very confusing. So make sure you stick to your plan and your strategy that you have built based on statistics, and then trade safe with proper risk management. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.